As I record this, it has been 7 days since the war has started. Putin's war, call it whatever war you want, but the war on Ukraine. And so I want to know what's been going on. Where is money flowing out of and where is money flowing into? What is working, what is not working? I know a lot of people are starting to bottom feed. I think that is a mistake to bottom feed this early in. So we're going to look at some of those too and talk about really what's going on with the markets, with the bond market, with gold, with silver. We're going to do a lot of looking today. So let's get into this. Stick around and we're going to get to it. Hey everybody, this is RC Peck and this is my weekly update. And we have to understand where the money is flowing. So I want to kind of do a tour around a lot of different charts, a lot of different asset classes. And even if you're 70 on a fixed income, but you have a small trading portfolio, this is going to help because it's going to teach you how to think better around investing. Or if you're 40 or if you're 50 or if you're 70, mostly what these videos are about is teaching you and showing you kind of how to think with your eyes and not with your ears. I'll tell you more about that. So let's do this. Let's jump over to the chart of the week. So yeah, this is wheat. Now this is a tracking symbol for wheat, W-E-A-T. And so actually, let me do this. Let me bring up the actual commodity wheat right there. So there is wheat. You can see that huge spike. You can also see that wheat's been going higher probably since 2016, right? So wheat has been moving higher in price since 2016, but clearly the spike at the very end of the price chart, that is the Russian-Ukraine war right there. And that is spiking. Now, it looks like we can get about another 15% on top of that before it hits lifetime highs. I'm guessing that this is lifetime highs here in 2008. But this is telling us a lot. Like, this is telling us what is really mattering, almost even more than oil, right? Because you can't eat oil. You can't eat gold. You can't eat stock. What you can eat is food. And so what we have here is the world saying, hey, I think the Ukraine war, the Russian, I don't even know what to call this war, the military operation, that's not a military operation, it's a war. But what we are learning right now is people are worried about their food. And that is an absolute spike because of Putin's war on Ukraine. And that is spiking higher. Now compare that, and let's just look at Brent crude. Think of that as oil outside of the US. There's definitely a spike there, right? Oil went up 19%. Actually, now I just want to see what wheat went up. Yeah, wheat's up 40%. So the world's thinking more about how am I going to feed myself than how am I going to fuel myself. Now, this is DBA. DBA is the Invesco DB Agriculture Fund. So basically, it's the agriculture division of commodities. And ever since it kind of broke that resistance, it's been doing well. And just roughly speaking, this year, it's up about 11%, so that's doing well. Now, the theme of last year was commodities. Commodities did best. They were the best performing asset class of last year. They're the best performing asset class this year. Here's agriculture, DBC. I'm just going to kind of get a general move, up about 24% for the year. If you want a different commodity index, it's GSG, and that's up about 35% for the year. So this is what we're learning for sure. Money is moving into commodities. It moved into commodities last year. Now it's moving into the agriculture part of commodities, wheat being one of the main places. Let's just look at corn here. What is corn? And corn hasn't had quite the spike. Now, the reason is, I believe what I heard was Russia and Ukraine produce a third of the wheat that Europe uses. So it's either a third of the wheat that Europe uses or a third of the wheat of the world. I think it was of Europe. Either way, it's a third and it's a big number, and that's why we see commodities moving higher. Now, what you can't eat is gold. Now, here's a tracking. Actually, let me just bring up gold. Not having it. I don't want to show you GLD, but so look, gold is getting interesting here. Anything above $1,800. I've talked about gold a lot over the last 15 years. I'm talking about it more. So that means it's kind of waking up. It did not spike higher. It's definitely moving higher. It's definitely higher since the war started. And it's got some resistance, right? So its first big thing was to stay above $1,800. It's got to stay above 1,800. And now it's just going $100 at a time. It had a bit of a resistance at 1,900. You could see that it did hesitate at 1,900 a little bit and then moved higher. I know this isn't going to be a big surprise. Its next big thing it has to do is clear 2,000, which look, it's $65 from 2,000 in US dollars. And if we were to look at gold in euros or probably any other currency, it's already at lifetime highs. So this is literally just because the US dollar is so strong. So money is absolutely flowing into, I want to see, well, I'll just give you an example. Here's Singapore dollars. Here is gold in Singapore dollars. So it doesn't look as strong as say, you know what? I want to look up EUX, is it? Here we go. Let's look at this. Here's gold in euros. So gold in euros is right there at a new lifetime high. And I just want to zoom out just to make sure so there we are. Let me get some information off the price chart. So gold is already at new lifetime highs, right? So there it is right there. The old lifetime highs were back in 2020. And gold, when priced in the euro, is at a new lifetime high. So it would make sense that it would take a breather here. But gold is definitely moving. You're just not seeing it a lot in the US dollar because, guess what, everyone? People are moving into the US dollar. So that's the US dollar right there. And had a double bottom right there. And for the year, it's up. People are definitely moving into it, but not necessarily a panic move or anything like that. And that's simply because as we zoom out on the US dollar, the US dollar has really just been in a channel since 2015, 100 on the top side, 90 on the bottom side. And as long as it stays in that channel, there's really not a lot to talk about with the US dollar, but money definitely is flowing into the US dollar. Money's flowing into gold, everyone. It's definitely flowing into gold. It just, from what's going on today, more money's flowing into agricultures than anything else. So I'd say people are starting to panic, but not in a major way. What I'm noticing is here's the S&P 500 here. Doesn't look that bad. This is just correction. It's just moving down. There's nothing crazy going on here. Here's the NASDAQ 100. It looks exactly the same. It's down more, so it has a double top right there. NASDAQ 100 is down about 15%. What I find interesting is Europe's really taking it on the chin right now. So here's the German stock market, and that's down. Now, it's only down 13.5%, but visually you can see how much worse it's about to start to get to the old highs pre-COVID. And you're seeing that across the board. This is a European, this is an ETF that tracks European stocks down 3% today. Really broke down out of the sideways channel, and it is just accelerating to the downside. I really see Europe pausing kind of at the pre-COVID high, which we're about 3 to 5% from. But holy camole, what we're learning is international and Europe is really getting hit much, 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 much harder than anything else. Here's China right here, kind of holding their own. It's down for the year. China peaked a year ago. And so China's been in a downtrend for a year. Emerging markets have been in a downtrend for a year and are accelerating to the downside. So from a stock point of view, the strongest stock market in the world right now, major stock market, is the US stock market, SPY. But check this out. Here's Mexico. Mexico's actually looking pretty good here. It's not a major stock market, but Mexico's probably one of the strongest stock markets in the world right now. It's just not one of the major ones. And I've talked about Brazil before. Brazil's doing great this year. It's just been in a complete mess the last few years. So if you want to talk just this year and this year only, Brazil is absolutely crushing it. So if you want to investigate a part of the world, it would be Brazil. If you want to find a place that's kind of protecting itself, it would be Mexico. But as far as the major markets, the S&P 500, the U.S. stock market, is really holding up best. Okay, I talked about gold. Again, I'll just look at GLD here. It's definitely breaking out. It broke this downtrend here. Again, this is US dollar here. So in other currencies, it has already done this. I'll just show you what I'm looking at here. It broke this kind of this downtrend right here. It did that nice bottoming, and it's slowly moving up. You don't see the movements like you get in agriculture. But look at that. It's looking beautiful. Again, from a US dollar point of view, it's got $2,000 per ounce in front of it. Once it breaks that and it starts getting momentum, this thing could see $3,000 with ease. The other thing I like to look at is, let's look at GDX. This is kind of the equity arm of gold, and it looks good. It's breaking out. It's, you see this similar kind of thing here. It broke out there. So we're seeing a bit of that breakout here. That's good, that you want to see that. You want to buy strength. You often hear me say buy strength, avoid weakness, or know where the money's flowing. So the money's definitely flowing into here. Look, industrial metals are probably still doing better, but you've got GDX moving higher. And when you start to look at GDX, when you look at GDX and you compare it to, let's say, the S&P 500, so the price chart you're looking at here on the screen is GDX, which is precious metal mining shares priced in S&P 500 shares. And I think the big move was really this breakout right there. It broke above that resistance and it's moving higher. So all you need to know really about this price chart is when the black line is moving higher, gold mining companies are outperforming the S&P 500, and that is what's happening. Let me just quickly take a big zoom out. Let's just see what this looks like. Yeah, so you kind of had this bottoming right here of GDX relative to the S&P, and so it's definitely worth a nibble. How you would know you were wrong is if you bought GDX and it closed somewhere down here where I blew an eye. So today GDX is about $36. If GDX closed below $28, then you'd have to say you were wrong about that. And let's just call that 20-ish%. So if you put 5% of your portfolio in GDX and you were willing to risk 20% of it, that means your portfolio would take a total hit of 1% if you were wrong. But again, I think gold is looking really stable here. Definitely for the year, it's looking really stable. The big news, really big news, what we're really noticing is money's flowing into agriculture. Money is continuing to flow into commodities. That's the big story of the year. Here's RSX, which is the Russian stock market. It's closed. The last time the Russian stock market was closed was 1917. And I think it stayed closed for 35 years or I forgot what it was. I remember reading it like, oh my God, was it 35 or 75? But it stayed closed for years. And so look, the Russian stock market does not need to open. This is YNDX, which is kind of their internet company. And it's not even trading. So yeah, Russia as a world player is in trouble, even though they have a lot of fuel. A lot of Western countries around the world are shutting off access for their richest people. So the billionaires of Russia represent about 30% of all of their wealth, compared to all the billionaires in Europe represent about 15% of Europe's wealth. And same thing in the US, all the billionaires in the US represent about 15% of all the wealth in the US. So Russian billionaires are getting hit pretty badly right now, but do not expect the Russian stock market to open anytime soon. It's very devastating. I'd stay away from it. It's impacting a lot of other parts of the market. I said before, this is not a time to start bottom feeding. I mean, if you do go bottom feeding or something like that, you really want to stay super small in the size you use. Let me just clear out all this stuff here. So let's just look at a couple symbols here just really quickly that have been hit really hard. I would not buy any pandemic symbols like Zoom or Peloton or Zillow. I'd actually look for companies that are super, super established like Shopify. But I'm not sure Shopify's done falling yet, as scary as that is. It's already down 65%. Might have some more fall to go. Facebook's being hit pretty hard. More fall to go for Facebook. Roblox, which is kind of a metaverse play, is at new lifetime lows right now. Square, which is now called Block, had a huge pop. But really, if you're going to get into Square, you got to wait until it closes above 130. So it's not the time, I would say, to bottom feed yet. If you are going to bottom feed, I would say do it with a really small position. And then lastly, let me just quickly show you the bond market. Money is not really, it started flowing into the bond market. Money is starting to flow into the bond market, but not in a crazy meaningful way, but it is. This is the US bond market right here on the screen. It stopped going up in August of 2020. It's been in a downtrend. This is the international stock bond market. This stopped going up in December of 2020. So there was some panic buying going into bonds this week. There's been some sell-off. So we'll see if money continues flowing in emerging market bonds. No one is putting their money into emerging market bonds. You want to stay away from that. And I'm just looking at, this is mortgage-backed securities. Let's call bonds a short-term bottom. Tips have definitely reared back, but again, they're hitting selling resistance again. So money's starting to leave the stock market. Remember, even if it's U.S. bonds, it might not be people in the U.S. doing that, but people from other parts of the world bringing their money into the U.S. market. So here's the S&P. Here's the S&P 500 divided by the U.S. bond market. So you could say the S&P has been weakening relative to the U.S. bond market since the beginning of the year. But that's going to be typical whenever we have a correction in the markets. And the S&P 500, the U.S. stock market is correcting right now. It's not crashing, it's correcting. It's actually taking on what's going on in the world quite well. It's not even down 10%. So there's definitely movements around the world, but one of the more stable places is the U.S. And then let's wrap this up right here. So let me just wrap this up with you here. And let's just kind of talk about, I've been talking for quite some time. So let's land the plane. Let's put a bow on this. Where you own your equities matters. Europe is absolutely weaker. The strongest stock market in the world from location is probably Brazil. So that's number one. Number two, gold is waking up. I don't want to say it's woken up yet, but it's waking up, getting a dabble in, getting a 5% position in could be justified. Money is absolutely flowing into and continuing to flow into commodities. I think that continues to be the big story of the year. Even before Europe was at war or there was a war on the European continent, money was flowing into commodities. Money is continuing to flow into commodities, and now it's going into agriculture too. So that's kind of the big takeaway. You can't eat gold, can't eat oil. You're going to need your corn, you're going to need your wheat, you're going to need your agriculture, and that's what the world is saying right now. We need to supply our food right now. So things are definitely getting more and more unstable over in Europe. And the rest of the world is digesting that information as it comes in. Thanks, everyone, for being in my world. Let me know where I got it right. Let me know where I got it wrong. What did I miss? What did I completely miss? Please leave it in the comments. I will respond to that. And that also gives me an idea of what to talk about next week if, in fact, I did miss something. And if you like this video, you will like our other videos. I have over 400 videos on YouTube, 400. So go dig around, and I think you're going to find a lot more, whether it's a weekly update or whether it's the Ask RC. Thanks for being in my world. I appreciate you, and I'll talk to you next week. Okay, bye.